This is A1 Basic Accounting Concepts. More information on A1 Summary Notes, Chan Chapter 2, Noonan et al. If you're looking at that book, Chapter 17. And if you're interested, and it is very interesting, you could consider taking an accountancy class, maybe at Portland Community College or Portland State, or wherever you find yourself. I should mention that about 10 years into their careers, a lot of engineers find themselves doing as much accountancy and economics and finance as engineering, which may sound sad if you love engineering, but you could look at it on the bright side. That means you probably got promoted, and that's why you're more involved in these decision-making processes. So this week for the discussion, I ask you to find the manager's or the CEO's letter to shareholders. If some of the companies, it's called a founder's letter. Other companies, for example, I think Disney, they don't actually include it in the report, but you can find it. They have an audio file, and they also have a transcript of the audio file. And it was at the annual meeting of the shareholders, the annual shareholders meeting. So track that down. If you have trouble finding it for your company, then please let me know and I'll help you find it. There'll be something that you can use. So the manager's letter is very interesting to give us just a very general feel for how the management feels that it's doing. It often is very positive sounding, as well it should be. We wouldn't want leaders who are pessimistic about the future of their companies, but they will at least give you some feel for what's important to the company right now. As a publicly traded company, the companies that you're studying are required to file a 10K annually with the Securities and Exchange Commission, so that's usually abbreviated as SEC. That's the arm of the US government that is responsible for making sure that publicly traded companies abide by standards of reporting in order to provide transparency to capital markets. And many companies, although not all, bundle a lot of that information into something called the annual report, which has more of a glossy feel to it, lots of attractive pictures of smiling workers and their latest products. But still, most of the information is going to be in the annual report. If you don't have an annual report, don't worry. You'll still be able to find everything you need to work on the project with your group. So the 10K requirement then is required of publicly traded companies. I'll just briefly mention that a lot of companies are privately held. Sometimes small companies, obviously they're going to prefer to be privately held because these reporting requirements are really quite onerous. You have to get it right. Serious consequences if you don't get it right. So privately held companies are not under these reporting requirements to the SEC. Even some quite large companies maybe will go private. Remember when Elon Musk said he was going to take Tesla private, I think, and then he said, I changed my mind. Well, we'll see how the SEC likes that. Anyway, so what are we going to learn from these annual reports to the SEC? Things that we might be interested in answering, maybe at a very basic level, is the company financially sound? And that would require an accounting of the assets of the company, which are the things the company owns. Sometimes it can be things they lease, but I digress. And also the liabilities of the company, that which the company owes. And then if you subtract the liabilities from the assets, what you're left with is a measure of shareholder equity or owner's equity. What is the value of the company to the people who own the company? And all this information can be found on the balance sheet, which is the first thing we look at in the next week of the class, so on the balance sheet. So that's question one. Another interesting question that we can answer using these reported information to the SEC is the company profitable? And by that, we mean that does revenue exceed costs? Revenue is the money made by selling goods and services. Cost, of course, is the cost of doing so. And this information we will find on the income statement. And we will spend quite a bit of time looking at the income statement. So we got the balance sheet. We're going to spend quite a lot of time on in a subsequent week. And we're going to spend time looking at the income statement. The next thing we might be interested in knowing about a company is how much cash was generated. And you might think, well, isn't that exactly the same thing as how profitable? That's actually not entirely the same thing, especially in a particular reporting period. And to give you a very concrete example, suppose you're a company that made a big sale in December of 2017. That'll be recorded as revenue in 2017. It'll be a big boost to your profits. In terms of cash, though, if you don't get paid until January or February of 2018, then it's not going to count as a cash inflow, and so the cash flows will differ from profitability, and that becomes quite important, especially if obviously you have trouble getting paid or anything. So this is the statement of cash flows. So that isn't the same as the income statement. And then finally, what does the company do with this money that it generates? So, what was the profit used for? And there's two main things that companies use profits for. One thing is, if you're an owner, you'll be happy. If you're a shareholder, they could give you a dividend. They could pay a dividend to the shareholders, meaning that was the reason you wanted the company in the first place. So not all companies pay dividends, or they could reinvest in the business by buying new machines or maybe buying other companies. And this is the statement of retained earnings, and we deal with that. That's along with the income statement. So those are the four main balance sheets or financial statements that we're looking for when analyzing a US publicly traded company. Is a company basically sound? It's not going to go bankrupt. Is it making any profit? Well, how about the cash associated with that profit? That will differ. And then finally, what are they using the money for? All right, so that concludes this video, and I will see you in the next video.